Good morning, everybody, and welcome to this ITESOFT webinar on Duty to Report 1 year on. My name is Nick Dunnett, and I'm the Managing Director for ITESOFT UK. Thank you for joining us, and just so you know what's happening during this webinar, we will be conducting a couple of online polls during it, so when we flag those in your direction, please, if you would give us your responses, that would be great. If time permits, we'll have a section for questions and answers at the end. So if you do have any questions, please use the chat facility to notify us of those so that we can respond to you on those at the end. So just to start with, really, what was Duty to Report? What is Duty to Report? And then we'll look at some of the details of what the results are showing. So as it was introduced, Philip King, who was the CEO, or is the CEO of the Chartered Institute of Credit Management, reflected that about 14,000 companies would be affected by Duty to Report, and that most businesses would take their time before getting around to submitting within the structures of the legislative requirements, and that's what we can see. So although the first reports have been coming in since November last year, and although the legislation kicked in just over a year ago now, roughly 10 to 15% of those 14,000 companies have submitted their responses so far, and the remainder are due to deliver their responses or their first responses at some point between now and the end of October, early November, depending on exactly when financial year end was for those companies. Just a quick reminder of who have to do a duty to report on their payment practices. So the legislation requires anybody with two of the following criteria to submit: either a turnover of 36 million or above, a balance sheet with 18 million on it, or over 250 employees. And when you do have to start submitting, if you fulfill those criteria, then it is a 6-monthly submission to report on what happened in the way that you paid supplier invoices within the last 6 months. So time for our first poll, and just to ask very quickly whether you are in a position that you have submitted or not. So if you could let us know, that'd be brilliant. We'll just give you a couple of seconds for that, and then we'll progress. So thank you for that, and almost exactly in line with the respondents rate. From those of you that are on the call, we've got a 14% who have so far submitted, which is pretty much exactly in line, as I said, with those that actually have. So let's have a look at some of the details of the reports themselves and what they're showing from those people that have submitted. So as I said, first reports came in November. 1,600, just over 1,600 reports have now been published. All of the reports are visible and shown online, and there's a link there to the government's service where you can search for any and all companies that have produced their reports and see both the summary of their report and the details as well, if you wish to. In terms of what they're saying, well, first thing that people talk about within this is the average time they take to pay. At two ends of the extreme, KPMG are paying people on an average of 0, which is quite impressive. However, in their explanatory notes, they state that all of these invoices are actually internal invoices to other bits of KPMG, and therefore they just pay instantaneously. At the other end of the spectrum, there's a group of companies, including Bella Italia and Café Rouge, which are paying at 1,000 days. Same argument from them. Those are all actually subsidiary companies and are cross-charge invoices between themselves. And for reasons that they have decided internally, they take an 1,000-day process. But they're a holding company that actually deals with true suppliers. They referred to and said that for them, they are paying actually 60-ish% of their invoices within 60 days. So it's also interesting just to see really that from that, the vast majority of organisations are paying their suppliers within 60 days, and just over a third are paying around the 30-day mark or within the 30-day mark, which I think is where the government ultimately would like companies to be at. So it shows that there's still quite a lot of work to do from the government's perspective if they want to persuade organisations that 30 days and less is the achievable target. Looking at those invoices that were paid within 30 days, we can see a small number of companies managed to pay everybody within those 30 days, and a fairly small number, around just over 100 companies, paid less than 10% of their invoices within 30 days. So most organisations are paying some of their suppliers within 30 days. And as you can see there, the average is around 53% of invoices paid within the 30-day period. So over to yourselves again. Not sure whether you know the answer, but how many do you think of your supplier invoices you managed to pay within the 30-day period from receipt? And let's have a quick look at that. Okay. So thank you for your responses to that. It's fairly clear split, 50-50 split between less than 50 and more than 50, with a few of you that aren't sure. So fairly consistent, again, across yourselves with the report. So I think kind of confirming again that, you know, the details the report is showing are actually, although they're only on 15% of total respondents, they're fairly reflective of what's happening across the country. So the second thing that the report drills into is the number of invoices that are not paid within the agreed terms that you may have with your suppliers. A very small number, less than 100, said that they managed to pay absolutely everything within agreed terms. To be honest, that's not a surprise, because it only needs one invoice or you know, a very small number of invoices to have a problem and a dispute over them to push that down below 100%. But the vast majority were paying the sort of, you know, you can see there almost 50% of invoices is the norm for people to be paying within their agreed terms for suppliers. Companies were then asked to give information about what their standard payment terms were. And as you can see from here, the first thing they have to answer is what is their shortest or only, if they only have one standard payment term. And you can see here the majority of payment terms are either within 30 days or within 60 days. There are a few who are less than 10 days as their shortest term. And you know, the majority are offering shortest terms of 30 days or under. Okay. For those that have multiple payment terms, then organisations are also asked to give information as to what is their longest standard payment term. And as you can see there, around a quarter of people actually say that they offer shorter payment terms than 30 days, and still their longest payment terms are 30 days. But for the majority of companies that are offering it, you can see that actually most of them are only offering one standard payment term. Somewhere like just over a third of people only offer the one payment term. And some 34% of companies are offering up to 30 days as standard. So the report then goes on to ask a series of questions about particular areas of the way that invoices are processed, and asks for yes/no responses or detailed additional responses from companies. First area that it talks about is e-invoicing. E-invoicing is a topic that gathers a lot of interest and has a lot of variable definitions. for the purposes of duty to report, e-invoicing is described as where a supplier can electronically submit and track invoices. And they have explicitly stated the caveat, not just sending an invoice in via email. So it covers more than that, as you can see. So quick poll again, just to see whether that reflects what you believe to be the meaning of e-invoicing for yourselves as your business, or whether you think that e-invoicing actually is something a little bit different to that as far as you're concerned. So thank you again for your responses on that. That's fairly conclusive. Absolutely everybody believes and agrees with that approach as to what e-invoicing ought to mean, which is great. So what's interesting when looking at the e-invoicing results is that only actually 23%, so just under a quarter of companies are able to offer this at this stage, and the vast majority do not. If we drill in a little further and just do a comparison between that 25% that are offering e-invoicing and the rest, it's interesting to see that those that are offering it are seeing some benefits in what they're able to offer. So as you can see on all the kind of key measures, from average time to pay, percent of invoices that are not paid within agreed terms are smaller, average time to pay is quicker, and they're able to offer their suppliers a shorter time frame for standard payments. So what it seems to show is that those organizations that are able to offer e-invoicing are able to provide better service and payment to their suppliers. And so clearly there are big benefits for it and from it. Just to sort of have a little look a little bit further at what some of those key suppliers are. Obviously, as well as being able to tick the box to say, yes, you can provide DTR, offering a supplier portal which allows suppliers to not only submit those invoices but also track them, gives a vast reduction in supplier calls. It's amazing how many suppliers like to phone up just to check that companies have actually received their invoice. Giving them the ability to see that they have makes life much simpler. It also helps reduce the workload for AP teams in terms of managing statements from suppliers, because suppliers can check themselves that you've actually received their invoices. So there are benefits for both your large suppliers who are submitting lots and lots of invoices to you, because they can manage the missing invoices and the discrepancies and the problem invoices without recourse to having to phone you up all the time, but also for the tail of your smaller suppliers for whom you may be only getting infrequent invoices. This type of solution also takes away a lot of the time that they spend with you, dealing with you and talking to you, because they're the ones for whom actual payment of their outstanding invoice is really important, because they've only got one invoice with you, and so they're the ones that may well phone you up much more regularly to try and chase what's happening. Giving them access as well removes the problems and helps you to support them in what's happening, and lets you manage that better. Finally, it also helps with giving you opportunities to negotiate on early settlement discounts. If invoices are ready for payment early, you can discuss that with suppliers if you wish to, allowing you to reap additional benefit. And it does also allow the supplier to maintain, with the appropriate checks and balances with yourselves, their master data to make sure that you're up to date in terms of their address, their VAT registration numbers, and potentially also their bank account details, to ensure that that can be managed automatically, rather than, again, taking time of your accounts payable team to support you in that. So moving on from e-invoicing, to have a look at a few of the other areas that the report reflects on. Firstly, the reports talk around changes to practice during the period So whether any organisations have altered any of their standard payment terms or anything like that. Not unsurprisingly, as this is one of the first reports, a set of reports coming out, almost nobody has actually changed anything during the period, but a small number did. The other areas about it are free text areas where organisations are able to explain their payment terms and explain their process for dispute resolution. The payment terms explanation has been generally used by those with either very, very low or very, very high payment terms, as you'd imagine, to explain how, like KPMG, are able to get away with a zero payment term, and how those set of restaurants and why they're justifying their 1,000 days for their payment terms. Dispute resolution comments in there are fairly standard, and as you'd expect, we send invoices back, we expect purchase orders, we expect things to be correct, that type of comment around what they do in dispute resolution. The report also asks people whether they're signed up to one of the standard payment practices codes, and at this stage, it's showing that almost nobody is for it. In fact, 95% of businesses said no, they had not signed up to the code of conduct for payment practices. To be honest, that's not a great surprise. The government's first attempt to resolve this issue around payment to suppliers was through backing payment practice code of conduct, and nobody really paid any attention to it, and nobody really bothered to join it, which is why, part of the reason why they went further to introduce this legislative requirement for people to submit. So it's not a great surprise that this proved that nobody was a member. It also asked about whether businesses were offering supply chain financing, and again, very, very few are, which may be slightly more surprising for people there, given currently interest rates are very, very low, and the opportunity for people to look at dynamic discounting and supply chain financing on behalf of their suppliers is something that's got quite a lot of interest throughout the industry at the moment, and it will be interesting to see if that number grows over the coming months and years for people. Finally, it asked if businesses deduct sums from payment as a charge. So do they charge suppliers to appear on a preferred supplier list? And again, very, very, very few actually do that. Just 1.5% said that they did it. And of those, only 80% of those 1.5% actually bothered to apply the charges that they said they might do anyway. So 20% weren't even bothering, despite that. So there's a summary for everybody really of what the reports have shown so far. As we stated at the start, there's still 85% of people to submit their reports. And so what we wanted just to do now briefly was to explain a little bit more about what you might need to do for those of you that haven't yet submitted, to make sure that you are ready and able to submit when your deadline is reached rather. So one of the key things that you do need to do is to understand what your current process is and what the practices that you're following are, so that you can see if there is anything that you can see that's going to flag up and might cause problems for you, and if there is, what is the justifiable explanation that you can provide, or will there be some kind of reputational damage? So for our collection of restaurants, Bella Italia, etc., formally announcing that they've got 1,000-day payment terms is not great for their reputation. Hence, as they've explained very clearly, that's not actually what they pay to their suppliers. That's their internal cross-charge rather than a payment to their suppliers, and that is handled differently and is generally done within the 30 to 60-day period. So it's important to understand that so that you can explain it, or alternatively, if you need to, look to make some changes to what your processes and practices are beforehand. It's also important to make sure that you can actually validate from start to finish what's happening. The requirement for time to pay is from receipt of invoice to money being, so receipt of invoice by yourselves to money being received by the supplier. So if you do it by a BACS transfer, you can assume it happens on the day that you make the payment. But if you are still printing, signing and posting checks, you will need to allow a period of time onto the end of your process from printing to when that check will get to your supplier and how long it will take to clear into their bank. So making sure you understand what the implications of that are also important. It's certainly worth thinking about having a practice run or a look at what the data would be now, just so you know what you're going to generate, and see if there are complications to be within your data, or whether you've got access to the data that you need, particularly for a lot of these percentages about payment times. As a reminder, it is a criminal offence from the government's perspective not to submit your report when you want to. The directors of the company would be subject to that criminal proceedings and would receive criminal convictions if they're seen to have either failed to have submitted a report or to have submitted a false report deliberately. Okay. Obviously, it hasn't happened yet, so but just to be aware and make sure that you and your organisation understand the consequences of this and the importance of getting it right before submission. So then finally, I just wanted to talk very briefly about ITESOFT and how we can help with some of this and what we offer as an organisation to our customers. So ITESOFT offer solutions around accounts payable automation. We have a product that is called Streamline for Invoices, and this provides some really kind of key and core benefits to our customers. I think the overarching key benefit that our customers receive is the ability to process vast numbers of invoices per full-time equivalent. Our customers are seeing numbers of 60,000 and more invoices per person being processed. And when industry research is carried out for people without our solutions, 20,000 is considered to be very good. So being able to put a 3 times multiplier on that is really important. We use a cloud solution to offer this to people, which means it's quick to deliver, quick to get high levels of throughput, and maintaining those forever is managed by the fact that the solution is in the cloud. And it's possible to achieve up to 100% of straight-through processing with this solution. Obviously, problems and disputes cause challenges, but we can certainly help you through this with this capture as a solution. And it offers kind of 2 real benefits within that. Because the capture process is in the cloud, the levels of automation you're getting are very high, and maintain that level of height due to our artificial intelligence and robotic processing to make sure that happens. The solution can take your invoices in any format, whether they're coming in paper and still need to be scanned, whether they're coming in email or EDI or any other format that you may wish to capture them in the first place. Solution also works with a shared supplier master data file to manage and ensure that again, those high rates of throughput are manageable, and it's able to automatically map the suppliers that you've got and the way that you've set them up in your ERP against our own supplier master data, which means that you don't have to maintain that as fully going forward, that your supplier data in your ERP system can be used to focus on how you need to interact with that supplier from a procurement perspective, rather than from a payables perspective, which is generally more useful to the business as a whole, and lets us manage the key things we need within it. Other benefits of our solution are that we are able to significantly affect and improve the level of fraud that's occurring by reducing that considerably. We look to make sure that we handle this by identifying fraudulent or potential fraudulent activity in advance of the invoices being actually paid and released for payment. So rather than you needing to get in external people to review invoices that have been paid, look through them, audit them, and look for problems within them, we try to stop that before that happens and reduce it in that way. Two key benefits of that: one, it's much easier to not pay a supplier when there's a fraudulent activity happening than it is to go back afterwards to try and recover the money. And secondly, if you're looking at it retrospectively, naturally you're only going to bother looking for the largest value invoices that have got a problem. The smaller ones tend to be forgotten and overlooked. This ensures you don't suffer from a high level of small value fraud, which can quickly mount up if you're not careful. It is possible, it is estimated rather, that fraud at the moment in supplier invoices equates on average to around 2% of people's spend. So an ability to reduce that makes a dramatic difference for organizations and the amount of money that they are essentially wasting and losing through this fraudulent activity. So solution really can help in that area. And then finally, obviously, if there are some problems, there are some disputes, or if the invoices don't have purchase orders associated with them, and there's a requirement for analytic coding to be applied and for invoices to be approved, then the solution provides a very quick, simple, and easy way for users to do that, and allows for very detailed reporting as to exactly what's happening, where, when, across the whole of the process within the business. And just as an example, Network Rail, on average, receive, process, approve, match, discrepancy handle all invoices within 1.2 days of receipt. So they are able to get documents through that fast and into their ERP system and ready for payment. And they are processing somewhere around 750,000 plus invoices every year, and yet are seeing that higher level of throughput within the system. So thank you for your time today. It's been great to share this information with you. To follow up, we have another webinar explaining a little bit more around how ITESOFT can help with you if you're interested in looking at implementing an accounts payable automation solution, and particularly around how you can work to build internally the business case that's required to support that and take that forward with your management to ensure that you've got support for the solution within the business. So we will be hosting that in 3 weeks' time on the 12th of June, and it would be great to see you then as well. Thank you all for your time.